welcome to the Mortgage Minute for June 20th. Well, I haven't talked to you guys for a while. I apologize. Lots going on. Even bought my own house in spite of all the claims that we're in a chaotic global mess. Let's start out with some good news. A couple weeks ago, OSFI, the Oslo Superintendent for Financial Institutions, came out and said, okay, we threatened to change the mortgage rules and force you to requalify. At renewal, they said, they're going to step away from that. Basically, what OSFI is doing is they're taking a shot over the bow. They're throwing it out at the bank saying, we really need you guys to tighten up the rules and mortgage lending requirements. But at the end of the day, not a big deal. So let's take a look at some of the other headlines. It's really all about Europe right now. You know what? Look at this. Prepare for Euro pain, says Mark Carney. We know that's on the horizon. We know that's happening. And look at the headlines. I mean, you gotta laugh at the election results in Greece. Election fails to resolve the Greek disaster. Well, no kidding. The government that won by 33%, which means the people opposing staying in the euro represented 66%, but they couldn't get their act together to combine to equal more than 33%. So really, then they said, well, this is going to soften concerns a little bit. Not really. It just is delaying the inevitable. Here's a great article. It says the new normal. Living in fear of financial economic crisis, get used to it because there's no magic bullet for Europe. Why Italy will be the next European casualty. Spain reels as bailout fears rise. I mean, we're seeing this over and over. Bottom line is, I mean, you've heard this for over a year now, all the comments about Europe and the potential ongoing crisis. That's not going away. The real question is, how's it going to impact us? Well, today, I just saw this one, housing boom will bust. But, if you read behind the headlines, it says, fears of financial woe if prices fall and interest rates jump. Now, note, all the naysayers who are saying that we're going to have economic crisis here on our shores are predicated on a significant jump in interest rates. When you take into consideration all these headlines, what that translates to is exactly what CIBC World Markets came out this morning and said. It's going to be next to impossible for Mark Carney and the Bank of Canada to lower interest rates until arguably 2014. So, will we have a bust in our housing boom? Not unless we have a spike in interest rates. Will we have a spike in interest rates? According to CIBC World Markets today, not until 2014. So again, cat with 9 lives, call it whatever you want, but you guys out there who are worried about spiking the interest rates rising, you've got a little breathing room, at least until 2014. So if you're investing, take advantage of low rates today. It won't last forever, but you do have more breathing room. The key is reduce debt because those rates are on the rise eventually. And watch for a settling in prices as a result of the European fallout. We'll be following this story probably for another year. But for today, that's the Mortgage Minute for June 20th, first day of summer. Hope you're having a great day. We'll talk to you soon. Remember, you can go to peterkinch.com for more information.